Hello and good day. Here is the daily analysis of the S&P 500 index and related indices. On the recent day in February, the Dow Jones, due to holidays in the US, Canada, and China, saw a decrease in market liquidity, so there was no significant volatility. However, with the start of Tuesday, prices face selling pressure, which is expected to influence the trend. It is expected that the downward trend will continue so that it can absorb the liquidity on the buy side. Also, by examining the multi-RSI indicator, there is a possibility of forming a liquidity event and a divergence. Positive. We can see that the price has entered a high potential zone, which indicates the continuation of the downward trend in the market. The price only had a short-term pullback upward and then again faced selling pressure, which could be a confirmation of the ongoing downtrend. It may move toward the rejection zone below, which overlaps with the BPR zone, and if this happens, the downward trend is likely to continue. And identifying a trading strategy. You can enter a buy position, set your stop loss below the rejection zone, and aim for a liquidity target on the buy side or the order block zone. But definitely keep this point in mind. At the level of increased momentum, the price movement with a downward displacement can set lower prices as your target and let it move up to the 50% level of the order block at 6,690. However, the current forecast is for a bullish move. It may enter the order block zone or the liquidity zone, and after that, move downward. It should have a hunt setup, and by entering the rejection block zone and identifying a break of 131 or a market structure shift, we can enter a position. We can set the stop loss at the 6,732 level, and for a risk-reward target, aim for 1.1, 1.2, or the liquidity zone at 6,083. Or the order block zone at 6,950. Also, by analyzing the 1-hour time frame of the S&P 500 symbol using the CVD indicator, a positive divergence and a positive node were identified, after which we can see that the price moved upward. It entered the fair value gap area, or the breaker block zone, and reacted to this level, which indicates selling pressure in the market. As a result, the price may experience another short-term sell-off and move downward from here. Looking closely at the lower section of the chart, we can clearly identify a specific order block area where the price has already reacted once before. However, immediately after that initial reaction, we can see that it was accompanied by very strong and sustained bullish momentum. This zone represents the true origin of the entire upward price movement. And for that reason, it is considered to be a highly significant and high probability order block area for future trades. By analyzing the 15-minute time frame, with the analysis of the S&P 500 using the ICT Kill Zone TF Lab tool, we can identify the kill zone areas and identify trading sessions, and examine the price movement during those sessions. As we can see, during the correct identification, there was an aggressive move downward that entered the area. It has become a 1-hour rejection block and has reacted to the order block area. As you can see, after forming a liquidity grab towards the buy side, the price moved upward, collected the buy side liquidity, and reacted to the distal level of the FVG area. This could continue its bearish trend during the London session, enter the order block area, and in the New York session, you should expect a bullish distribution move within the market. But if liquidity in the market increases and the price moves upward, then ultimately during the New York session, it could be accompanied by a bearish distribution move and target lower prices. We are currently looking at the Volatility Index, commonly known as the VIX, which serves as the primary fear gauge for the S&P 500 market. At the very start of Tuesday's trading session, there was a noticeable gap up, and the market moved upward with significant bullish momentum. This specific price action could potentially lead to another aggressive bullish move in the VIX, which might subsequently cause the S&P 500 index to experience a sharp drop. After that initial surge, the index could eventually move downward again. Ultimately, following this period of volatility, we might see the S&P 500 begin to move upward as well. It could enter a bullish phase, according to the 4-hour time frame analysis of the Nasdaq. and an analysis of the multi-RSI indicator, we can spot a positive divergence in the market. We can identify that the price is forming lower lows. But on the multi-RSI, it is forming higher lows, which indicates a potential upward price movement, the end of the downtrend, and the start of a new trend. However, by examining the price action, we see that the price lacks enough momentum and liquidity to start a new trend. It doesn't have the strength for an uptrend, and after a short-term bullish move, it could head downward. It could enter an order block zone, and if we identify a reversal in the trend, we can enter a buy position. Also, an SMT divergence has formed here, where in the Nasdaq, a lower low has appeared. But in the S&P 500, a higher low has formed, indicating an SMT divergence between the S&P 500 and the Nasdaq, which is another confirmation for a bullish move. The price is in a market where, overall, the outlook for Tuesday's movement in both the S&P 500 and Nasdaq markets is bullish, and by examining up to the 1-hour time frame, only a slight pullback is seen. In this symbol as well, using the CVD divergence indicator, a positive divergence has been identified, which again caused the price to move upward. It entered the BPR zone and ultimately faced selling pressure. This indicates a downward price movement which could collect the sell-side liquidity. This presents us with two scenarios in this range, where the price could move downward. It could sweep the liquidity and, after closing in that area, confirm the end of the downward trend and the beginning of a new one. It is an upward trend, so traders can use it as a trading strategy, Ryan Soldier, to enter a buy position, set the stop loss below the swing, and target a risk-reward ratio of 1-to-1, 1-to-2, or aim for the internal liquidity level and the order block area. However, if the price faces more selling pressure, it can drop down to the order block area and move toward the RPD, which is located at the 24,022 level and is a fresh order block area. This means it has been a source of strong movement for the market to turn bullish, as we can see. It pushed the price upward, and so far the price hasn't reached it or reacted to this area. This indicates there are large orders in this zone, which can attract the price toward itself. And after reacting to this area, it could enter a bullish phase again, according to the 15-minute timeframe analysis of the symbol. Nasdaq's price movement during the Asian session. We can see that it made an aggressive move downward. It swept the liquidity on the sell side and eventually was accompanied by a bullish correction, which is typical for smart money trading style, and ICT traders can use the liquidity finder or liquidity detection indicator to identify the liquidity level. At this particular moment, a sell-side liquidity level has been clearly identified on the chart, and these levels represent key areas of significant interest that attract the price toward themselves. After the liquidity has been collected, the price begins its main move, and it is anticipated that the price will move downward to collect the sell-side liquidity and enter an order block zone. And during the New York session, it may be accompanied by a bullish distribution move, according to the 4-hour timeframe analysis of the Dow Jones symbol. We can clearly see that the price made a sharp and aggressive downward movement and has now successfully entered the rejection block zone. And ultimately, it was accompanied by positive momentum, and a morning star pattern is currently forming in the market. If the current candle closes bullish, or even closes above the two previous candles at the 49,550 level, it will be a confirmation of the bullish trend in the market and could push the price upward. Also, by using the multi-RSI indicator, we can see that the price movement has entered a high potential zone. In fact, the price has managed to reach the oversold area or even the high potential zone. This could be a confirmation of the end of the downtrend and the beginning of an uptrend. However, if selling pressure in the market increases and the price experiences a downward displacement, it could enter the FVG zone at the 48,965 level or the order block area at the 48,770 level. And after that, once we identify the end of the downtrend, we can enter a buy position. With the 1-hour timeframe analysis of the Dow Jones symbol, We can see that the price movement has entered an order block zone. It has reacted to this zone, which suggests that the price might move downward again. If a lower low forms, this movement can be viewed as confirmation. For strategy number 2, in a scenario where both a rejection block zone and a CP or continuation pattern zone are clearly present, these two zones overlap, so the price can enter this area. And after that, by identifying signs of weakness in the downward trend and receiving confirmation, we can enter a buy position. Place the stop loss behind the zone or rejection block at the 49 out of 67 level. Set it with a risk-reward target of 1.1, 1.2, or hold it for a cash out towards the buy side. Or if liquidity and buy orders increase within the range, the price can move up to the order block at the 50,086 level and continue its upward trend. With the analysis of the 15-minute time frame for the Dow Jones symbol, we can see the price movement heading downward. It held cash on the sell side, accumulated from the bottom of the Asian session, and ultimately was accompanied by a bullish momentum. By examining the multi-RSI indicator, we can see the price movement entering a high potential zone, which indicates the continuation of the trend. There is bullishness in the market, and the price could move upward. If during the London session, liquidity is collected on the buy side, then it is going to gradually build up and accumulate. But overall, the general outlook in the market is bullish at the moment, which is progressing with the London session. If liquidity is not collected, the price may experience a significant downward trend, and subsequently following that movement, it will enter the two specific identified rejection block zones. Or the next BPR zone, which is the RPD area. Look for a trading opportunity to enter a position. Wishing you success and profitable trades.